Hello guys, welcome back to another Lumley Trading video. In this one we are going to be doing some in-depth stock analysis, technical analysis over on Credit Suisse, ticker CS. Now, shares, they were up a lot greater pre-market, but they are up over just kind of the announcement that they will borrow up to $54 billion from the Swiss National Bank, so about 50 billion Swiss francs. So anyway, just gives them a bit more, I guess, security. But anyway, this stock, only one I'm really looking at trading, not investing. Again, just from looking at the overall long-term thing, not anything I really even want to be swinging for more than a week or two, because it's just a bit too much of a volatile stock. And the options don't really have enough volume to really make them efficient to be trading that way. But anyway, what are key levels then going over onto the longer term Credit Suisse charts? On the left we have a 6-month, on the right we have a 1-year chart. So obviously the last few days you can see very volatile, kind of came back to where it was pre-news and now starting to dip again once more. So what are kind of key things and kind of key levels that I'm paying attention to? So from a support side, again, could see it definitely dipping further, because from a support side we don't really have one until 155, and that's why I was kind of surprised when we saw it bounce at 175. Yes, it's a bit of a psychological level, but overall, not something I touch because I was being more patient waiting for that 155 touch. And that's kind of what I'll continue to do unless Credit Suisse comes down to that 155. Not going to be something I'm going to touch. Now, if it comes down further, I'm also then looking at a 78-cent support, a 56-cent support, and that is it from the support side. Now, what we can see, obviously, we do have other deviations, but we can see they've all turned negative. And usually when I see this, when the deviations, especially if a lot of them are negative, it's something very off-putting with the stock, and one I would prefer to short when it comes into a resistance. And the reason for that is, if a stock has multiple negative deviations, it means it is in a really strong downtrend. And obviously, if it's in a really strong downtrend, I don't really want to be taking it long unless I'm able to kind of just get those day trades, and then the overall big trend shouldn't be as effective. But if I'm, trying to swing this stock, the only way I'm really swinging this is if I'm trading it short, just because of that strong downtrend. So anyway, those are the 3 supports. Again, off of each of these levels, really I'm only looking at a day trade, maybe a potential swing, but only for a few days. And it's just looking to play these levels long. If we break this 155, again, there is a potential in short play. It's just waiting for the break below, come back to test it as a resistance. And if it can hold that 150 resistance, then looking to trade to around that 78-cent target. But what I think will be a nicer trade, and if Credit Suisse starts pushing to the upside, if we can't, coming into resistances. So we do have levels at 155 to around 135. Not levels I'm looking to trade. Again, these are statistical means. I use these as targets only. So if I'm obviously holding the stock long below this level, that will be my final target. If I'm holding the stock short above this level, that will be my absolute final target. That's how I use statistical mean, not as kind of tradable levels, just trade to them. Now, if we break high, this is really where more of my trade ideas will kind of come on Credit Suisse. And from the 355 and above these levels, this is where I'll just try and trade them short bias. Again, I'll probably try and trade them with the outright puts. But if I can hedge it, I can easily trade the outright shares and just hedge it with some calls. Because again, I'm never going to hold a naked short overnight. Because again, there's just so much risk, especially on these kind of stocks where they can move, 20% if some sort of news comes out. I don't want to be holding that naked. So again, if I'm taking this stock short with that shares, I'm definitely having it hedged with some call options. Now, if we did continue higher, we do have another level at kind of that $4 psychological resistance. Then also 455, and if we did break to an extreme high, but don't really need to focus on that for now. We do have 550, but really overall, the stock's weak. The banking sector, as of right now, again, there's just a lot of fear in this. Why we're going to see the majority of these bank stocks just start to decline. Really, on this, again, it's just really waiting for it to come to the downside. A potential bounce at 155, but if we break below that, looking to take it short, probably below that 155. But really, Credit Suisse, probably not something I'm going to trade myself, and the reason for that is their stocks with kind of just more volume and kind of going to be easier ones to trade, and ones like that. When we're talking about like First Republic Bank, again, we have analysis on this, would have been uploaded before this Credit Suisse video, and I also go through my trade plan for it because it is one I'm going to trade myself. Anyway, hope you enjoyed the video and the breakdown on Credit Suisse. If you enjoyed the video, why not drop a like and subscribe? Let me know if you're trading Credit Suisse yourself. Otherwise, I'll see you in the next one, and that's it. Peace.